All right. Well, hello everyone, and welcome back to our VantagePoint YouTube live session here today on October 21st. So we're going to be diving into what I think is some very highly valued information today because we're actually going to be covering how to identify undervalued assets and possibly take advantage of those from a trade standpoint. So whether you're a trader that likes to hold longer term or maybe likes to capitalize on some of those shorter term swings, finding assets that are great opportunities that have good growth potential overall is going to serve any trader very well, especially if you like to trade bullishly. So also we can better understand when to get out of those markets and really capitalize on that shorter term swing. So we're going to be focusing on those undervalued assets today and primarily how to identify and find those types of stocks. So I'm actually really looking forward to this session. But before we dive in, I just want to remind everybody I'm not a licensed advisor, so I'm not going to be giving you any trade advice, but I am an expert in the technical analysis, especially the predictive technical analysis right here on VantagePoint. So excited to dive into the software with you guys today and just go over some very key concepts that whether you're a VantagePoint user or maybe this is the first time you're seeing VantagePoint, you can still take away a few really great pieces of information, and hopefully that helps you to trade with more confidence. After all, that's why we do these sessions and these, education here within our VantagePoint YouTube. So happy to have all of you here. Before we get started, if you could please just do me a quick favor. I want to make sure, one, everybody can hear me loud and clear. I hope. I should have asked that earlier, but if you can, just let me know in the chat if you can hear me loud and clear. That'll also help you find the chat. So if you have questions during the session, I would be happy to answer any questions that you throw at me, trade related, of course. So looking forward to seeing your questions and comments coming through during the session. That's really what makes these sessions what they are and so much more powerful and more valuable to each individual trader. So share those questions, right? This is a community of traders here. So share those questions as we go through. And also too, now that a couple of you have found the chat, let me know if you are currently a VantagePoint user or not. If you could just say, I use VantagePoint or I don't use VantagePoint, that would be great. That just helps me to assess from the get-go really where we need to start and how deep we can go. So I want to really focus on, our members who are here joining us today. So I want to make sure that we're covering content that is going to be relatable and usable for you guys as traders. Perfect. All right. Well, thanks, Robert. Thanks, Dev. Much appreciated. Abel. Thanks, Justin. All right. Wow, lots of you. Okay, perfect. So as I go through our session for today, of course, I'm going to keep an eye on that chat as I usually do. But if I miss a question, just retype it back in the chat. I probably just didn't see it, or I'm trying to cover a lot of questions that come in. So please, by all means, retype if necessary. So if you see here, I do have our VantagePoint software pulled up on the screen. So for those of you who might just be getting into VantagePoint, maybe you just started using VantagePoint, or maybe this is the first time you're ever even seeing VantagePoint. I want to break this down very simply so you know exactly how to utilize the tools that we're using going forward through this session. That way we're all on the same page. All right. Now, these are concepts. Of course, if you don't have these particular indicators, these are concepts you might be able to use and take back to your own trade platform as well. So what we have in the VantagePoint software are some very special indicators, in fact, and one of those special indicators is this blue line that you see here that goes across the screen. Now, I want everybody to remember the concept of red and green. I usually preface this ahead of time, but just to make sure everybody understand that the concept of red and green is really important in VantagePoint. Green is going to be bullish expectation and red will be bearish expectation, especially as it comes to our trends here. But there are a couple of points of confirmation we want to get. If you want to be a good trader, right? you typically want to be a confident trader. And so in order to do that, give yourself the confidence of multiple sources of evaluation, multiple sources of confirmation, so you can make a really good informed trade decision. So let's talk about how to do that really quickly, and then we'll dive into finding these types of assets as well. So the first thing, let's talk about a bullish expectation. So with the blue line, as I mentioned earlier, this is a predictive moving average. So again, this is a proprietary predictive moving average through VantagePoint. We use neural networks and artificial intelligence to actually forecast this market ahead of time. This line actually predicts 2 days in advance. So looking at a 2-day predictive forecast can certainly help you to better understand whether or not it might be advantageous to jump into a potential trend. And so as you can see, this blue line comes up above the black line and our trend turns green. It's really as simple as that. If the trend is green, it's a bullish expectation for that crossover, for that indicator, for that point of confirmation. All right, so this is kind of our first point of confirmation here. Our second point of confirmation comes from our neural index, which is right down here at the bottom. Now that is a very fancy name, and it should, because it is a very fancy indicator. However, it is very simple to read. So with that being said, the neural index is in fact just a 2-day price expectancy. Do we expect price to go up or do we expect price to go down? And so with green reading here at that crossover point, we can see we have a bullish expectation. So this is our second point of confirmation. Now, the third point of confirmation actually involves 3 separate lines, and that's going to be our predictive differences down here at the bottom. These predictive differences at the bottom are going to help us measure the strength of the current trend. In this case, we have a bullish crossover or a bullish trend. Now, if you're entering into a bullish trend, do you want bullish strength going into that trend? Do you want strength coming to back up that trend? I hope the answer is yes, right? I was hoping that was a rhetorical question, but just in case you didn't know the answer, there's your one freebie for today. You do want strength pushing in the direction of the current trend. And so, yes, we do see strength, in fact, coming up with all 3 of these lines. Now, these 3 lines do measure strength on a 1, 2, and 3-day predictive scale. And so, yes, all of the indicators we've talked about so far, the 1, 2, and now 3 points of confirmation here, those are all predictive. All right. So you can have great confidence that the artificial intelligence is doing all the work behind the scenes to give you these incredibly accurate forecasts. Okay. So those are our 3 points of confirmation. Now you will have a 4th point of confirmation on that day. Of course, we are looking a little bit further back in time just to give a good analysis, an example of how to utilize the software. But our 4th point of confirmation is in fact going to be this predictive trading candle. And that's our 4th point of confirmation. And we would typically want to see green on the top and green on the bottom for bullish confirmation. That red on the top there, that just means that our high is expected to be slightly lower than the previous day's high. So yes, this is in fact calculating based on that predictive data, the predicted high and the predicted low, meaning the predicted range for that asset for the trade day. Incredibly powerful information, and certainly not only giving you confirmation on the trend, but also can help you better evaluate where your entry point should be as well. So if you like to strategize around your entries, hopefully all of you do, right? Then you can certainly use your predictive trading candle for that purpose as well. Again, serving multiple purposes here. But overall, we have our check 1, check 2, check 3, and check 4 to make sure that all pieces are in confirmation for that bullish expectation. And so here we can see these 3 are all lining up, and we would likely have had a bullish predictive trading candle at that point in time as well. So there you have it. 1, 2, 3, 4. If all are in agreement, then you have the confidence to potentially expect that bullish trend. Now, if we take a look at the remainder of this trend, like, great, okay, entry. Now, how do you manage that position, right? Well, good news is that predictive moving average is going to do a lot of that for you. And so as long as that blue line stays above the black line and this trend remains green all throughout here, we've got good confirmation that this trend is likely to continue in a bullish direction. Now, let's look at the inverse of this. All right, so let's look at the opposite scenario, because you may also want to know how to exit a position as well. I don't know where your struggles are with your trade plan, but I can tell you it's at one of three places. It's either your entry, your exit, or possibly even your position management as well. So tell me in the chat. Let's just do kind of a quick pop quiz so I know where to focus today as well. Do you feel like you struggle more with your entries or more with your exits? Let me know in the chat, and we'll see what we get and where we need to take today's lesson. So I am going to come all the way back, and let's review sort of an exit scenario here. Now, I said it was going to be the inverse of the bullish move, right? So if we just take a look at our blue line and make sure that that is crossing below that black line and the trend turns red, all right, that's our first point. Our neural index is red. That's expecting bearish price action. Our predictive differences are all three trending down. So we have check 1, check 2, check 3, and we would likely have had a bearish predictive trading range as well, meaning that trading range was all in red. So you can have confidence that, okay, something is really shifting here, and you would likely want to potentially exit at that point, or at least protect yourself from the downside risk. Now, again, maybe you enter into a bearish position here. Maybe you like to short the market. That's okay. There's no such thing as a bad market, just an up market and a down market. As long as you know how to trade or when to trade in either one, then you can make money in the market as long as it's moving. So moving to the downside, moving to the upside, as long as you can strategically see that, which we can here with the indicators, then as long as that trend remains red, you've got confirmation on that bearish expectation until we get those 4 points of confirmation again to the upside, which we've already evaluated together. So I think everybody should have a good handle on those checkpoints along the way. Okay, so a little bit of a mix here. Entry, exit, exit, exit. So a lot of you with the exit mentality or struggle, I should say. And so that's partly position management as well as, okay, when do I just say, when do I take profits, right? Or maybe when do I say I got it wrong and minimize losses? And so we'll certainly dive into that concept a little bit more today. So thank you so much for that feedback. But we will also talk about finding opportunities, because sometimes we may think it's the exit, but it might just be that you had selected the wrong opportunity. You might think it's the entry, but it might just be that you had selected the wrong opportunity. And so we're going to talk about how to find potentially undervalued assets and how to manage those positions and potentially look for those exit signals along the way. So let's jump into our next chart here. I've got Dollar Tree pulled up because you can see here on the short term expectation, we've got some really good movement here on Burrows or Dutch Bros, right? Who needs a coffee today? Not me. I've already had a couple, if you couldn't tell. But Dollar Tree. So Dollar Tree is an asset that has pulled back recently, right? And so when we are looking for undervalued assets, let's first kind of define undervalued assets. Who here is familiar with the term undervalued stocks? Let me know in the chat. Because if you are familiar with it, it's, a concept that's been out in the markets for a very, very, very long time. In fact, it's kind of the methodology that people like Warren Buffett utilize, where they're looking for undervalued assets, where the value of a stock is very, very high, right? But the price point is not so high, right? So you're essentially getting that stock at a discount. So, I like to shop, and I always like to get things at a discount. So why not in your investing as well? So when we talk about undervalued assets, we're really looking for things that have not performed as well as they maybe typically do, or as well as that the sector itself is performing at that current time. All right. So what we can look for is things that have recently pulled back and then are now starting to kind of catch up if you will, with their proper valuation. Now, some of this involves some fundamentals as well. You may look at PE ratios, and some other fundamental key pieces, but you're looking for good, solid companies, right, that are trading at less than what they typically do, all right, or less than what kind of the sector is bolstering up at that point in time. And so here on the Dollar Tree, we can see that overall the Dollar Tree has had a really, really nice run, over the last couple of months. Here we're looking at a 6-month chart. So we can see that we do have a really nice bullish run, but then we had some things happen in the markets, and some of these may be fundamental, but you can see navigating through those fundamentals with the technical analysis is really where a nice marriage comes. And we have really good confirmation, because there may be some things happening during this time frame, right? And so what we see is Dollar Tree pulling back, all right? Now, if you were in Dollar Tree previously, now notice, and again, these are for everyone who typed in exit into the chat. You'll want to pay close attention here, all right? So notice our trend remains green all the way up through here. And I did not mean to bold that line so well, but it's a great indication of a solid trend. So I'm gonna leave it like that, because we had a really nice bullish trend there, right? So if we see then where we had our bearish crossover right here, cross to the downside, boom. Did we have a red neural index? We did. We had a red neural index. And did we have our predictive differences all coming down at that same time? We did. So did you have the 4 points of confirmation indicating, hey, this is the start of a potentially stronger bearish move here? If you are at profit, you may want to think about protecting those profits rather than giving it all back. The markets can erode away your profits very quickly. Look at how long it took us to get to this point here, and yet how quickly we were able to fall down, right? So the rate of decay here is going to be very, very high. All right, especially in a downward move. Things tend to be slightly more volatile to the downside. All right, so if we have a nice bullish move to the upside, and then we start to see that bearish crossover, again, with confirmation, you may want to think about protecting those profits. All right, markets have enough money. Don't give it all back, right? So as we see then where could be another potential entry point, all right? And that's where, again, we have those points of confirmation lining up. So here on 1013, guys, this was recently, right? This actually came up in what we would call IntelliScan. And we're going to get to IntelliScan in a moment, because that's going to help us find these types of new opportunities. But if you notice, we had a fresh crossover. That's what we would call a crossover that just recently happened. All right, so with the blue line crosses over the black, and we have confirmation from our neural index, confirmation from our strength indicators down here at the bottom, and check 1, 2, 3, along with our predictive trade candle, the 4th point of confirmation to confirm, okay, now we're at a valuation that's fairly low for this asset, right? A price point that really hasn't been touched in quite some time. And we're looking back at almost 6 months here since this asset has been at this low of a price point, right around $85. So looking for those undervalued assets, well, Dollar Tree's not going anywhere, right? This actually happens to be more of a safe haven asset as well. So think about just the company financials here, and look at companies that typically perform well, but may be undervalued at this time. All right, because what that allows is there's plenty of room for expansion. So when we hit a high, right, that's going to be a major resistance. We've got a lot of room to run before we come back up to retest that level. So there's a lot of growth potential here before we come back and touch that previous high. All right. In fact, you could even add like a 52-week look back indication here to identify those high and low points as well. But we can see where price action has really started to come down and fall below normal values, and now potentially getting in at a great price with some room for expansion. All right. So that's the great thing about undervalued assets, is that they typically have a lot of room for expansion and growth within that asset. All right. So let me just take a second to look through the chat here, because I do not want to forget. And while I do that, if you guys could, if you haven't already, just go ahead and hit the like and subscribe button for me. I'm going to just take a look through the chat. Perfect. All right. Okay, good. Justin, I love the little hand raise. That's fantastic, right? So that definitely helps me through the session to just make sure we're hitting the high points here on pieces of information that are going to add value to your trade strategies, right? So I certainly don't want to under deliver here today. So as we see, let's take a look at the dollar tree from a longer term perspective, because undervalued assets also have, again, longer term growth potential as well. So whether you like to hold shorter term, or maybe you like to hold a little bit longer term as well, there's significant growth potential here as well. So I'm going to switch on over to what we would call the triple cross. So for those of you who are newer to VantagePoint or are just seeing it, there are multiple views in VantagePoint that can really help you customize the software for your trade strategy. After all, we really want the software to work for you and not the other way around. And so what you can do is, in fact, customize your VantagePoint software for your particular trade preferences. So this is one way to do that, and it's the crossovers. So as we see here, our triple cross is these 3 lines, and that's why we call it the triple cross, because it's comprised of a T-cross short, a T-cross medium, and a T-cross long. So what you need to better understand is that these 3 lines have 1 day of predictive data, 2 days of predictive data, and 3 days of predictive data. So you are, in fact, looking at 1, 2, and 3 days on this view. It is a bit more conservative view, because not only is it looking at those 3 moving averages, but it's evaluating the relationship between them. And so when we see green, then we have a really strong bullish trend that has a lot of integrity left in it. It's a strong trend. It's not a new baby trend. It's something that's established, right? It's established itself as a bullish trend. And this is really important, because when that trend starts to weaken, you'll get a shading of yellow here, and these lines will start to converge on each other. And so when that convergence happens, that's when you know that things might be at a higher risk. So you can see that we started to get that yellow shading right around here. So for all of you that are struggling with your exits, if you know something is at a higher risk, you may want to tighten up those risk parameters, right? You may want to take a portion of profits to protect and preserve some of those profits that you've already made and some capital, right? Now, you would, again, use that risk management system that hopefully you've built into your trade plan to know, okay, what am I going to do in a high risk scenario? If you can't answer that question, then you need to start thinking about what you would do in a high risk scenario. What is your trade plan there? If you have a plan, you can trade the plan, but without a plan, it's tough to do, right? So hopefully, some of this information will help you to formulate a plan. So if we take a look then where our trend turns red on the triple cross, we can see this trend is very strong red all the way down until we get that yellow shading again, right? And again, that's a risk of that trend reversing. And so here we have a bearish trend that then shifts to a bullish trend with our green shading now activated. We know that we have a confident bullish expectation using our most conservative indication right here on the triple cross. Now, something I want to point out, all right, you can see that the triple cross has just turned green over the last 2 days. All right. Keep in mind, this is a very important point. So the triple cross is a more conservative indication. All right. So if you are looking for things that have been going down for quite some time, the triple cross is a great way to identify that. Keep that in mind in about 5 minutes when we jump into IntelliScan. Okay. Now, what you can see is if we switch over to our medium term crossover, which is the default, this is where we had the chart on the medium term crossover, which is a 2-day trend forecast. All right. So this is a more sensitive indicator. So what we're doing here is actually pairing up a more sensitive indicator with a longer term indicator here. Now notice the triple cross happened and confirmed bullishness after the medium term crossover. So the medium term crossover being more sensitive, triggered or signaled first. The triple cross follows, adding additional confirmation that that trend is generating some traction. It's gaining some strength, right? So we have an asset that pulled way back, right? And has been down for quite some time in a bearish move. But now we have confirmation on the medium term crossover that things are going up, and our triple cross was either yellow or now confirmed green, adding confirmation and confidence to that bullish expectation. All right? It's really that simple. We don't have to overcomplicate things. We read the technical analysis for what it is. If you're looking for assets that have been down and now are expected to go up, much like a reversal, right? Oh, Mo, that is a great point. Mo said that the verified support and resistance. So you do want to evaluate support and resistance as well. That is a key indication, especially if support is holding strong, right, Mo? So if support is holding strong after a major correction like what we've seen, and support holds strong, that can also be another indication that this undervalued asset is now starting to gain some traction and recoup some of its lost valuation. So if we take a look at, yes, and you could use that as a fifth point of confirmation, Justin. So what we could do, in fact, I'll just drop down my indicators here, and you can see I actually normally have support and resistance on my chart, but the VantagePoint software comes with the 4 points of confirmation, including those multiple crossover timeframes. There's 4 of them as well. But you can also, there are some optional indicators you can choose to add on if you wish. But support and resistance is not a new concept. Support and resistance is essentially supply and demand. Support is really where buyers reside, right? So if we have a level that's holding strong, all right, this can be an indication where an asset that has lost a lot of value here, right, and hit a support point where this might be the turning point, right? So you can see this asset hasn't been down at this level since back in May. That's quite a few months ago. And so with this support level holding very strong, we can see now that we have renewed strength, price action, and crossover, confirming that off of support. Now, when that happened, and here's what was referenced in the chat, when that happened and we got the crossover, were we already at resistance, or did we have enough room to run? And we did have some room for expansion there, right? So let's just take a look and see. You could actually use like a profit calculation tool to see, okay, if price came up and hit that resistance, what would your profit be? And you have almost 7% in just a couple of days. So is that enough for you? I think most traders, I know a lot of professional traders would take that any day of the week, but you can see then what your profit expectation is. Now, again, speaking towards those that are having trouble with the exits, are you setting a profit target? Are you setting goals for your trade? If you're not, that might be something you want to incorporate, right? I'm not trying to tell you what to do or how to do it, but having the right plan for you, right? Everybody's profit target's going to be a little bit different, but that can certainly help you to create those objectives along the way for your trade. Now, in this case, right, we actually blew through that resistance on the first day, right? So at this point, we come up to touch another resistance, but we have a big down day. You may choose to exit out completely or wait until we resume the trend, because guess what? Our trend is still green here, guys, right? So yes, we had a bit of a pullback. There were a lot of markets that pulled back that day, but our medium-term crossover never wavered. You can see that that's bullish that entire time, saying, okay, we just had a little bit of a pullback here, but this market is still in a bullish trend expectation. right? And keep in mind, we're looking at some undervalued assets. So we have some room for expansion. Now, if price comes to our resistance again and can break above, meaning 2 closes above that resistance level, we typically need 2 consecutive closes above a resistance level to signify a breakout of the trend. And when that happens, then the expectation, of course, we have a lot further even room to go before we hit that next resistance level. So you can see the room for expansion there if we can break through that resistance level. But assessing risk at that point is key. At a riskier standpoint, do you just tighten up your risk parameters, or do you exit and save yourself and take profit? That's got to be up to you. There's a lot of different strategies for that to protect yourself, but also not necessarily miss out as well. All right. So yes, that could certainly be not only another point of confirmation when we look for support to hold strong, but also using that resistance as potential profit target as well. So you can see the potential there also. All right, so let's take a look. You can see again the multiple time frames, and then we also have the shorter term time frame, which is going to be our short-term crossover. This happens to be the most sensitive. So the medium term was a 2-day trend expectation. The short term is a 1-day trend expectation, but again, still using that predictive data. So here we're looking at the trade desk. All right, this is currently an undervalued asset, right? And we can actually, good company financials, if you go in and do your research and on the fundamental side, but also too, just looking at the technical analysis as well. It can help you identify these assets much more clearly, much more easily, and so much faster. All right. So just talk about efficiencies and proficiencies, using predictive analysis, artificial intelligence. Again, have the software work for you, right? So you can see here, as we saw previously with the pullback on the trade desk, right? Did we hit a support level that was strong? Well, my eyes are kind of trained for this. So we can see we did have a support level that held strong, right? So I'll put on that support level here. We have a support level that held strong. Did we have a bullish crossover again on a more sensitive time frame? Sure, right? We did. We had a bullish crossover here. We had our predictive neural index coming up, and then we had our predictive differences all trending up at the same time. So now we have a support level that held and that potential bounce, right? So now let's look at resistance. So let's just come and turn on the resistance. Did we have enough room to run? Well, at that crossover, here was our resistance level. All right. But look, our trend remains bullish this entire time. Little bit of a pullback here, but if you notice, we create a new support level. So now we have rising support. So we have support that is rising along with the trend, helping to confirm and again support that bullish price action. So if you notice now, again, we have support at a much closer point. We've blown through that resistance with good momentum, and again, our moving average here maintaining its bullishness as well up until our next resistance level. Now, this is where we really start to run into some pushback on price from resistance. So you can see we really only jump up above that 1 day, right? And so we do go a little bit further, but not too much before we kind of peak here. Now look at what's happening down at your predictive differences, your neural index, and your crossover. At that point, do you have your exit signal? Well, on the short-term crossover, you certainly have a signal that's going to tell you that this market is likely to go bearish at least over the next 1 day and possibly further on from there, because this is giving you good confirmation. So if you like those shorter term or earlier movements, then here you go. You have from crossover here, I'll just kind of put it middle of the trading candle to mid trading candle here where we get our crossover. And you can see you've got almost, over 18% in just just about 15 days. All right. Now, of course, I can't guarantee these profits. Everyone's going to get in a little differently, right? Maybe a day or two, or potentially even at different price points, right? I just kind of patronized it at the center of the trade candle. So, of course, no guarantees. There never is in the market. But you can see just by following the VantagePoint indicators, you have a high accuracy rating on those signals there. Now, how you're going to trade it is going to be up to you. All right. But giving you those clear exit and entry signals along as well as knowing how to manage that position can certainly, shed much needed light on the trend and where it's expected to go. So you're not always kind of on the edge of your seat waiting for things to happen and then reacting to it. You can actually plan ahead, because keep in mind, these indications are actually given at 6:30 p.m. the night before. So last night you had the indication of a bullish expectation on the trade desk, and you can see we had our 4 points of confirmation coming on up. You had that bullish crossover. Again, is support holding strong? Yes, if you want to use that as a 5th point of confirmation, Justin. So thank you. All right. And then also too, you've got our bullish neural index, and then we've got all 3 predictive differences coming up. You also have that bullish predictive trade candle as well. So from that point, 4 points of confirmation, 5 points of confirmation if we use support and resistance. Yes, we do have that confirmation. Now, if you want to see where an asset is valued, I mean, we could even come in and take a look at what we would call the 52-week index compare. I don't know, is anybody familiar with an index compare? It is exactly how it sounds, all right? It's going to compare the current asset, in this case, it's the trade desk, to other like assets. It's going to tell you where it's at currently as compared to the major indices. Now, VantagePoint's index compare is going to rate that against the Dow, the NASDAQ, the Russell, and the SPY. All right, so the 4 major indices. So we can see that currently the trade desk is underperforming, right? Well, we're talking about undervalued assets, things that price has underperformed, but the valuation of the company is still very high. All right. So we can see that currently we're at 69.71% underperformance on the trade desk. All right, I'm going to back this chart out. I'm going to just flip this on over to our triple cross view. All right, because looking at a longer term perspective, it's really nice to see those larger movements. And we're going to back this trend out. We can see that overall, the trade desk is really over the last year, right, dropped significantly. And we're at current levels prior to a major bullish move. Well, that support held strong here, and look what happened afterwards, right? So our support is holding strong here, and we not only have a short-term crossover, but we also have our triple cross as well. So again, confirmation that we do have potential strength enough to possibly push us through these resistance levels as well. So at that resistance, if we're able to break through, again, we have room for expansion here, right? There's significant growth potential as well. All right. All right. So that 52-week index compare is a great way to understand, okay, where is this asset currently as compared to the major indices over the year, especially if we're talking about undervalued assets that typically do really well, but for one reason or another, they are underperforming right now, but still have great growth potential in the long term. And those can really generate some significant gains. Same with Colgate here, right? Or Wix. Let's take a look at Wix here, because this is actually one that came up in a scan. We're going to build it here in just a moment. But if you notice, again, this is a perfect example of VantagePoint just doing exactly what it does, looking at those points of confirmation. Again, exit here. Exit signals with those points of confirmation coming down, but then a possible re-entry signal, or really a bullish trend indication here on our medium term crossover. All right. So if you notice on our medium term crossover, I'm going to pair this up with the triple cross here. I'm actually just going to drop a line right here on our crossover. This is the first day that our blue line crossed below, or I'm sorry, above the black line. So if I just zoom on in, you guys can see it pretty closely here. So the blue line crosses above the black line. All right. But if we back this out, right, back to our 3-month chart, now flip this over to our triple cross. There we go. Our triple cross. Hang on. There we go. All right. Wrong button. So you notice that our triple cross is still bearish. So this is going to be an earlier indication that there's some significant shift potentially happening here in this move. Look at what happened last time right here where we saw the medium term crossover. I'm just going to switch on back so you guys can see. I'll drop a line on that last medium term crossover where we had confirmation here, right? And then switch on back to the triple cross. So again, this is where the triple cross is really going to help you to add additional confirmation after that initial signal. So here our triple cross was still red, but we're getting a bullish signal from our medium term crossover, that 2-day trend expectancy. A little bit more sensitive, right? But then once we get full confirmation from our triple cross, then we have even more confidence that something that has or is currently at a low point now has the potential to rise significantly. All right. So again, are we at that very similar state right now, and will we continue? Right. So that's where we can look and assess from that earlier entry potential standpoint or earlier shift in the trend, using that medium term crossover on into, oops, there we go. All right, just taking a minute to load. So that medium term crossover on into the triple cross, the more conservative view. So if it crosses over on the triple cross, then, you know, you can add confidence or maybe add to your position or, you know, lots of different ways to assess that from a position management standpoint as well. Maybe you stay in longer, maybe you roll over your option if that's where what you're trading is option. So a lot of different ways to utilize that from a strategic standpoint as well. All right. So is there any assets that you guys want to take a look at? Because we're going to build a scan. So I just want to ask that before we jump into scanning. But remember these concepts because we're going to use those in the IntelliScan. The same indicators we use on the chart are going to be the same indicators we use to scan for these exact types of opportunities. And so if you want to see the 52-week index compare right there on Wix, again, evaluating that asset and where it is currently compared to the major indices, we can see that typically Wix outperforms the market, or at its high, it outperformed the market at 39.24%. That means it was doing 39.24% better than the major indices. I mean, the major indices have been up significantly this year, and now you have an asset that's typically done better than the major indices, but right now is at a low point. And support is holding strong, and you're getting crossovers, confirmation of potential bullish movement. Look at your room for expansion here, right? So we've got some room to really grow in this asset to get back to, you know, kind of its normal outperformance, if you will. All right, so let's take a look. All right, KHC, AA, perfect. All right, that's probably going to take us to our scan. So let's just look at these very quickly. Kraft Heinz. I don't know why I was blanking on that ticker symbol. I usually can spell ticker symbols better than I can spell the company names most of the time. But all right, let's take a look at KHC and AA. Does anybody have any questions on just undervalued assets in general? How to identify? I know we've been through several key pieces of identifying an undervalued asset, but any questions there as we jump in? So Kraft Heinz, possibly a really good example of that, because we have had a major pullback or reversal. I don't even want to call it a pullback because it's not short term, but major reversal correction, if you will, especially if you put it on this triple cross view. So let's jump on back to our 6 month, and wow, you can see that this is really at a point where support is either going to have to hold strong, right? Or we're going to have some potential trouble. So again, looking at that longer term perspective, do we have an asset that is typically a pretty good company? Yeah, I mean, Kraft Heinz has been around forever, right? Ketchup isn't going anywhere. But if you can take a look at your support, do we have a support level that's holding pretty strong? And yeah, we can see price is really pausing at this previous support level here. So if I put my crosshairs right on price here, not the low point, right, but right here on price where things are toggling back and forth, right? We're getting some consolidation here. You can see it's hitting several key arrows along the way. All of those green arrows are going to be support points. So when you see support points lining up like this and price unable to push down any lower, we know that support is typically holding strong in that case. And that's really what we see happening here. So then do we have the medium term crossover? And the answer here would be yes. In fact, that crossed over 2 days ago. So support held strong. We have the medium term crossover. We've got a bullish neural index and we've got a bullish predictive trading differences as well. Sorry. You say that 10 times fast, you get a little tongue tied. So you do have confirmation here. Now, again, if we can break above that triple cross 2 days in a row, that'll give us additional confirmation for that asset as well. So we can quickly kind of look up where Kraft Heinz is. And where did we land today? 25.64. So were we able to stay above that T-cross long level? We'll know that tonight when things update, but currently the T-cross long is at 25.57 and we closed just above that T-cross long level. So you can treat that almost as the preliminary resistance, if you will. And so if you put on your verified resistance, do we have, oops, I thought I clicked yes. All right, we've got some room to run before you run into that resistance level. So current to resistance, let's just see what our percentage is. So you've got almost 3% in a couple of days. Is that enough for you as a trader? From that resistance standpoint, if price only hits that resistance level, is that enough for you for a win? And that's how you can assess those positions early. Now, if we get some good solid momentum and start breaking through the resistance, because one key to a breakthrough of resistance is momentum. And so with momentum, we could potentially break through that resistance. And again, we've got some room for expansion here, right? Some room for improvement on Kraft Heinz. So let's take a look at AA. I'll back this out just a little bit further. AA has kind of come off of a bottom. And this is an example where things were fairly undervalued previously. Of course, we did have, tariff central over here. So we had some things kind of going to the downside for quite some time prior to that. But then once we see the reversal happening, let's jump this over to our triple cross to see how this trend continued to the upside. And we can see once we get that confirmation of the trend moving to the upside, we get some strong movement. This asset's been pretty volatile. So this is where you may, if you see an asset that has a lot of volatility, this is where shorter term swings can work really, really well, similar to what we saw on the trade desk. Doesn't mean that it doesn't have a bigger upside potential, but there are smaller increments that you could take advantage of along the way. That's the benefit of swing trading, right? And that's where you could use that scaling into and scaling out of a position to kind of strategize around that volatile movement as well. As long as you're on the right side of volatility, it lends itself really well to some pretty big profits, right? So use it to your advantage. All right, so let's jump into the scan because I do want to show you guys how to do this. It's going to be pretty quick because, well, IntelliScan is quick. And it's not super complicated. It's going to take all of the concepts that we used today while evaluating these assets, and it's actually going to look for those particular types of movements. So if you're a VantagePoint user and you are using IntelliScan regularly, just type in the chat, IntelliScan, or, let me ask it this way. How comfortable do you feel with IntelliScan? Give me kind of low, medium, and high, right? What's your confidence level using IntelliScan? Low confidence, or are you kind of right there in the middle where you kind of use it, but you're not really sure what you're doing? Or do you have a lot of confidence in IntelliScan and you're building your own scans and you're finding opportunities, you're really using it to your max? Let me know in the chat. Because we may just have to do a session on just finding different types of opportunities. So let me know so we know how to move forward on future sessions, kind of get a poll going from what you guys want to cover. So if we take a look at the short-term crossover, remember that's our most sensitive. So we would just simply set that to up. So again, we're looking for undervalued assets. The medium-term crossover, we would typically want to see that medium-term crossover going up because things that have been in a strong bearish move for quite some time, right? Again, it's going to take some movement to really get confirmation going. I like to say it's like a baby trend, right? It's a little bit more sensitive than a trend that's been established for a while. And so we would typically look for that short-term cross and the medium-term cross to have good confirmation. So both in agreement there. Now, looking at your triple crossover, remember, we're looking for something that's been down for a while. We're looking for something that's been trending down significantly for, a good period of time. And maybe that's like a cycle. Typically, a cycle is 28 days in the market. That's 28 calendar days. So typically that's 20 to 21 trade days, if you will. So you can look at the triple cross and say, give me the direction that's shifting down, and say, let's look at the triple cross that's been down for greater than or equal to, we can hit 20, we could and really narrow things down from there. You could also back it down to like 18. 18 seems to be a pretty good assessment from that downside movement as well. And then of course you want your 4 points of confirmation. So our neural index trend, we would want going up. Those are 2-day indicators, right? And then our strength indicators, we want backing that bullish move. If things are undervalued, we're going to need some hefty strength coming in. And those are going to be our predictive differences. And so then, of course, our predictive trading range is going to go up as well. So if you remember from the beginning of our training session, we now have looked at our crossovers, which is your first point of confirmation. Your neural index, which is your second point of confirmation. The predictive differences was number 3. And then our predictive trading candle was number 4. So everything that we looked at on the chart is now right up here in IntelliScan, and we can identify and pinpoint those types of opportunities you're looking for. I told you, we do it fast and we keep it simple because the software, again, is really going to do the work for you. All right. So if it's definitely better than going through the stocks one by one, especially if you know how to work the IntelliScan. There are an infinite number of IntelliScans you could build. It's about identifying the types of opportunities that work best for you as a trader. What are you looking for as a trader? What is your entry setup? So for those of you who typed in entries, the IntelliScan can certainly help you identify those types of opportunities so you're not wasting time looking at assets that don't even make sense for your strategy. So for this particular setup that we're looking for today, those undervalued assets, short-term cross, medium-term crossover up, triple cross down, something that's been going down and is now renewing its strength and kind of trying to catch up to its assumed value, right? So price is trying to catch up to value. If we then just take all of our stocks and drop those right into the IntelliScan, that's the fun part, right? That's sort of the interactive element there where we can drag and drop those stocks. And now we wait. All right, so now we have 54 opportunities. That's still quite a few opportunities. So there are some other things you could add into this. Of course, with assets that have good valuations, they're typically going to have higher volume as well. So you could put in volume into this scan. You could also identify based on close price as well. So volume, higher trade volume is going to ensure that there's enough liquidity that you can buy and sell. It's not just an asset that you're going to get stuck in, right? So if we set this to, let's say greater than or equal to, a good threshold is 1 million. You may want more, slightly less, but a decent threshold is 1 million. So I'm just going to count my zeros here. And now we've got daily trade volume, by the way, at 1 million or more. So greater than or equal to 1 million in daily trade volume. And that's really significantly decreased those assets to 26. So from 54 to 26, Certainly better than 1,822. You can see that's the number of stocks we just added in here. That does not even include our ETFs as well. So again, here is kind of our setup here. You could filter based on the number of days to look for assets that have been down for 18 days. Well, there you go. Who was it? Mo, thank you. You put in KHC. So what came up in our scan? Right? Because again, KHC actually met that criteria where it's been down for a while and it's now starting to see renewed strength with a possible bounce off of support as well. All right, so KHC right on in there for us. We can take a look at a couple of others as well. And you may also want to look at different types of assets as well. So, different sectors that might have undervalued properties at that point in time. Things like financials right now are fairly undervalued because the sector performance hasn't been, as strong, and that can certainly hold back some assets as well, because we know things tend to move in groups, right? So the major indices, and then the sectors, and then the individual asset. And so, with that in mind, you can really pinpoint and narrow down different types of opportunities. Now, here you could go through one by one. Again, we have Kraft Heinz. You've even got Meta Platforms up here as well. So you could take a look at Meta. Now, Meta is a higher priced asset, right? So you can take a look here, but we've had a major reversal, right? And then potentially coming back on up into some strength as well. So again, Meta, strong company, right? We can take a look at several others, but you can jump on through. You can see here's Carnival, right? This is one that, a lot of people ask for. So we'll take a look at CCL. Where are we at on CCL? Are we at kind of a fair price or a discounted price, maybe even better than fair, right? So let's just back this out. We can see, are we at support? This is going to be another key indication here. Are we at support? We are, right? We can see this asset this support level is held pretty strongly, right, over the last kind of several months, if you will. And we're having some trouble breaking through that support level with some renewed bullish strength. And then, of course, you can also take a look at your resistance as well. And here you go. You've got resistance right here. So if we can break through that resistance, we've got some room to run initially, right? But if we can break resistance, then again, we have some room for expansion there as well. So if we take a look here, you could, it depends upon how far you want it to have gone down. 18 days is going to give it at least some time to really move. If you put this number of days to reverse that, so we're looking at those that have a stronger move to the downside, you could take a look. You've got Dexcom that's been significantly down for quite some time. You can see, again, are we at support? Support holding strong, right? So again, adding on that support. Is support holding strong? Do we have predictive indicators that are now giving you the signal that it could be the right time for this bullish movement? So not only, are we in the right circumstances with that undervaluation, but now when is it time for this asset to really start growing again? All right. So are we coming into a growth spurt time, or are we kind of at a standstill? Disney is not one that I would have expected right now, but that's why the scan is there. So we can see that coming off of Disney, we can see we've had a major pullback here, right? Back to a key support level right here. I'll throw on that support for you as well. But most significantly, maybe not. There we go. All right, there we go. Technical difficulties, right? So again, key support level, but Disney with its previous valuation, you could even look at the 52-week index, compare here to see, where does Disney typically perform, right? Where has its performance been previously compared to where it is now? And we can see at its strongest, Disney usually outperforms the major indices. And we can see because this bar is primarily green. And so with Disney being typically an outperformer by about 23.78%, again, meaning it's outperforming the major markets by about 23.78% at its peak. Where are we at currently? It's typically only underperformed the markets by about 3.3%. Right. So currently we're kind of right 0.95%. So we're kind of right there with current markets. But again, room for growth here. And again, we're seeing that pullback happen and that support level holding strong. So do we have room for expansion? You could also add on that resistance, right? So you can see that if we can break that current resistance level, we've got some room to run to the next and then some room to run to the next. So managing the position along the way, of course, but to retest those highs, we've got some significant movement and growth potential. So lots of, I'll kind of open up this scan here. You can see several of the different assets coming in from the IntelliScan. Now, you could also, add additional confirmation to those assets as well if you want to look at professional movement from, someone like Larry Williams. We've got the professional sentiment index, so we know professionals are moving into that market, as well as another great way to confirm that the time is right, the conditions are right, the momentum is right, the strength is right. So you're really stacking those odds in your favor. So whether you're looking specifically for undervalued assets or maybe for assets that have done really well and are expected to continue to do well, we can, certainly take the guesswork out of finding those opportunities by using the IntelliScan. Use the artificial intelligence to your advantage. There's no sense in looking through each asset individually. Not all of them are going to meet your trade setup. So pinpoint and identify those so you can spend your time and effort on opportunities that are going to, really be right for you, and then assess and decide as a trader, make an informed decision on whether or not you take that trade. So I hope everybody enjoyed the session for today. Thanks for your feedback. I appreciate all the questions and things coming in. It really does help just to make these sessions the best that they can be. We want to provide as much education as possible. So of course, we'll see you guys on the next session, and appreciate you all joining us today. Certainly hope you have a great rest of your week ahead. Thanks, everybody.